What's up, viewers? I'm back with another video. Today we're going to do something a little bit different. Instead of just doing analysis, we're actually going to talk about a trading strategy, okay? I consider myself a swing trader, so I would like to look at the weekly charts, the daily charts. This gives you more time to do things in your own life. But for those people who are a little crazier, who want action right now, every second, who want to look at the charts every day and utilize every single opportunity, then this strategy is going to be really effective for you. As you can see, we're looking at the 5-minute chart, which is every candle is 5 minutes long. So this is going to be moving quick, and you're going to be making a lot of trades in a day. But this is going to be really effective once you see how it works. You could do this on any market. I'm doing BAT to Bitcoin. You could do it on any market, but in order to determine whether you should do it on that market, you have two questions that you need to ask yourself. If you can satisfy this criteria, then yes, you could trade this market. The first one is it liquid? So you need to just check general volume. There's no set number for this, but if there's liquidity in the market, if people are actually trading it, and it's not just some random coin or stock no one's ever heard about, then you should be able to answer yes to that question, and you should be able to trade it. But there are some assets out there that are just not liquid enough to do this. Second is, as you can see, I'm using Bollinger Band width here in the bottom. This is how you determine this next part, okay? So when there's moments of high volatility, all right? So the Bollinger Band, which is this blue kind of cloud here, also the Bollinger Band width, and the Bollinger Band percent I'll be using. So this has a lot to do with Bollinger Bands. You could read about it. But generally it's a measurement of volatility. So if you see that the Bollinger Band is extremely extended, like how it is here, in this high moment of volatility, you can see it dumped and it created a high moment of volatility, right? So what happened on the Bollinger Band width over here, I'll just expand it, is you crossed up and you had this huge explosion of volatility, all right? And when that happens, you do not want to be trading this market, okay? So I drew this yellow line here as a general rule, which I think it works really well, very well actually. It's at 0.03 on the Bollinger Band width, all right? So if your volatility is over 0.03, that means it's too volatile and you shouldn't be trading this market at that moment, right? So as you can see in this dump here, yes, it was very volatile, and at that moment we would have exited the market and not been trading this. But eventually, as all assets do, it corrected and the volatility kind of came down, right? So you can see right here the volatility went down and we went under 0.03, and at that moment is when you could re-enter the market. Okay, so now that I've got that out of the way, let's actually talk about trading this and using the strategy. So the second thing you're going to be doing after determining whether you should trade this market in the first place is using the VWAP, all right, volume weighted average price, and on this chart it's this white line, okay? Also, I just wanted to point out that in the middle of the Bollinger Band there's going to be a median, as you can see here, but I have taken the median out. You could keep that median in for your own analysis, but you don't need it for this strategy. So we have the white VWAP here. The white VWAP will tell you one of two things: if you're in a bullish condition or a bearish condition, okay? And your strategy is going to change based on this. So if your price is under the VWAP, you're in a bearish condition. If you're over it, you're in a bullish condition, all right? That's going to be very important for how you're going to go about this. So right here, our volatility went under 0.03, so I'm going to get rid of this indicator here. But we know that it's right here, that we have decided that we're going to start trading this market when the volatility decreased, right? And the second thing we did is we determined that it's a bearish market condition because this white VWAP, we're under it. We're under the VWAP, the price, so we're in a bearish condition. Okay, so you have those two things. What is your entry? That's the third thing you're going to ask yourself. Where do I enter this market? right? And the answer is, for a bearish condition, the lower Bollinger Band, okay? So the bottom of the Bollinger Band. So as you can see here, it touches the bottom of the Bollinger Band. But there's another criteria for entering the market. You want your Bollinger Band percent indicator, okay? This one needs to be touching 0 or very close to it. So as you can see here, we have touched the bottom of the Bollinger Band, but the Bollinger Band percent did not touch 0, which is down here, this dashed line. So these two things are not confluent, therefore you do not enter, okay? So you just let it play out. You didn't do an entry, you didn't meet your criteria. So you wait, and now this is like 5 minutes, so an hour or so later, whatever, you touch it again, okay? And here's where you use a little critical thinking, because we have not touched this dashed line at 0, but we've gotten pretty close to it. And this is a scenario where you really have to use your critical thinking. There's no right answer. But personally, I think this is close enough. For my style, I think this is close enough. This is decent enough confluence to where we've touched it once and we bounced. We touched it twice and we bounced. We touched it 3 times and we bounced. For me, that's a confirmation. Anytime something happens 3 times, that's a confirmation to me that this is fair game. This is a good entry. Great. So what's your stop loss? Whenever you have an entry, you need to have a stop loss. Your stop loss in this scenario is a 5-minute candle close under the under the Bollinger Band line here. So that would be a 5-minute close under. And you could see that there's no 5-minute close under that happened. So your position would be fine here. You would just hold it. So what's your exit? So you have your entry and your stop loss. What is your take profit? Your take profit is one of 2 things, whichever one happens first, right? So one of these 2 things can happen first. First is when you touch the top of the Bollinger Band. Second is when you touch the VWAP, right? Whichever one happens first, okay? And when I say, let me make this clear. When I say touch the top of the Bollinger Band, I mean a 5-minute close on top of the Bollinger Band or near the top of the Bollinger Band. A 5-minute close. Like, it doesn't have to be touching it exactly, but if it's very close, then that's good enough, all right? And let me just point out before I forget, your inputs for the Bollinger Band is 20 for the length, and the standard deviation, or the molt, or whatever that means, standard deviation is 2. And for your VWAP ratio, just use the default, I guess. And same thing for your Bollinger Band percent. The length is 20, standard deviation is 2. Okay? Just wanted to point that out real quick. Anyways, we're back to where we were. You took your entry down here, where I said. So you're going to do whichever one happens first. You either get a 5-minute close above the Bollinger Band or a VWAP touch. So up here, you had a VWAP touch that happened first. And a 5-minute, it happened at the same time. 5-minute close and a VWAP touch literally happened around the same time, in the same 5 minutes. So this is where you took your profit. And that right there is a huge gain. Let's take a look at the percent. You just made 2.36% in however long this is, probably less than an hour. That's really good. And you're going to be doing this a lot of times. Okay? So now that you've crossed over the VWAP, right here you crossed, let me zoom in a bit. You've crossed over the VWAP, which means that your market condition has changed. Remember how I said earlier, VWAP determines market condition. Your market condition has changed to bullish because you're over the VWAP. So therefore your strategy is going to change, okay? When you're in a bullish condition, your entry is a touch of the VWAP. So as you can see, we've touched the VWAP. And your exit is going to be the top of a Bollinger Band. But there's a caveat here. There's a caveat that you have to know and you have to include in your analysis into your strategy. Your VWAP and your top Bollinger Band are very close to each other it's the amount of distance in between them is incredibly narrow. If we take the measurement tool here, it's 0.26% of a difference. That is too low. So in this scenario, yes, you're in a bullish condition, but your distance between the Bollinger Band, so your general take profit can only be 0.26. That is too low. You want to have, at least, in my view, at least 1%. So you could say 0.995 or 1%. It is up to you. But I want to say at least 1%. So in this scenario, you're not taking any positions until you get 1%. You're not at 1%, you're not at 1%. And then right here, around right here, you're about 1%. Okay? And you got to use critical thinking again, because you could say 0.85, 0.8, even 0.75. I think that's the lowest you should go. You got to use your brain here. I think 0.75 is fair as a percent distance between the VWAP and the top of the Bollinger Band. But that's the lowest I would go. Generally, I would use 1%. So we could see that for this whole area, it's just not enough distance. But here, the distance has started to expand. You see it curls and expands right here. And that's because of this moment of volatility that's been happening. So right here, you could consider this area a decent enough entry. But I got to make this clear before we continue. When we're in a bullish condition, okay? So your entry in a bullish condition is a touch of the VWAP, okay? And in this scenario, your Bollinger Band percent isn't going to matter as much until we're taking profit, because it flips. When you're in a bearish condition, your VWAP percent is your entries, but when you're in a bullish condition, your VWAP percent is for your exits. So here, this is your entry, and your stop loss on this entry of a touch of the VWAP is a 5-minute close below the VWAP. If you get a 5-minute close below the VWAP, that is your stop loss. So here, you didn't get stopped out, and you rode this candle up to the top of the Bollinger Band. That's your exit. Your exit is at top of the Bollinger Band, and that's it. But you want to look for confluence, like I said earlier, confluence on the Bollinger Band percent. So here, you touched the top of the Bollinger Band, and you also have confluence of touching the top of the Bollinger Band percent. That is your exit, which is another trade in the same 2-3 hours. You just made 2 trades of 2% about, which is great. So now you wait. You see that you kind of touched the bottom of the VWAP here, but it wicked off of it so fast, and it didn't really even touch it. So I wouldn't take this as a trade. I would wait. And then here, look at this. This one is double confluence, actually, because not only do you have a touch of the VWAP, you have a touch of the bottom of the Bollinger Band. This is a great entry. And the same thing for exits, like back here where they were touching together the VWAP and the Bollinger Band. That was a great exit in a bearish condition. But in a bullish condition, you have a double touch here. That's great. That's double trouble right there. So take that as an entry. And what's your stop loss? It's a 5-minute close below the VWAP, which we didn't get. So we just ride it out. And then when you touch the top of the Bollinger Band, it was up here, to be fair. If this distance is 1%, like we talked about earlier, that's good enough for an entry. And this would have been your exit. Yeah, you could have rode it a little bit more, but if we're going to stick with this strategy, this would have been your exit right here. And now you wait. It went up. It started to dump. Great. Oh, here's where you get an entry. But let me make this clear. This is very important. You're starting to get 2 things happening. The first one is a 5-minute close below the Bollinger Band. Okay, so that's a warning signal. You could still take this entry, but that's a warning that something might be turning soon. When you start getting 5-minute closes below the Bollinger Band, that's a warning. And if you get a 5-minute, like right here, you get a 5-minute close below the VWAP and the Bollinger Band. That is where you exit the market. That's another criteria that I didn't mention a little earlier because it's dynamic. But here you have a 5-minute close below the VWAP and below the Bollinger Band. That is not just bearish, that's overwhelmingly bearish. So you do not take long here. You could short, but you do not long here at all. And you wait until something changes. So here you get another 5-minute close below the Bollinger Band and the VWAP. Yeah, it pumped a little bit here, but you have to be wary. You know, it bounced a little bit, but look, it went right under again. So you have to be very careful when this happens. When this happens, you should take a little bit of a break, because even though you went over for a moment, you quickly closed under it, and then again under the Bollinger Band, and then you're closed under the Bollinger Band again. So this is overwhelmingly bearish scenario. So now you need to wait for a 5-minute close above the Bollinger Band, which you got right here. Okay, so now that this happened, you have to please wait for the 5-minute close, which happened above the Bollinger Band. So now you could start looking for positions again. But remember, we're under the VWAP, so that's still a bearish market condition. And in a bearish market condition, your entry is the lower Bollinger Band. So even though we got back above it, we still have no entry opportunity because we're still hovering up here. So it hovered up here for a little while, and then boom, you got a possible entry. But this looks like a 5-minute close below the Bollinger Band. It's very narrow, but it's a 5-minute close below the Bollinger Band. This is risky. You had one here that was decent. So yeah, you could have taken an entry here, which would have been fine. But then you got a 5-minute close under the Bollinger Band, so you got stopped out. So again, we're still in bearish conditions. And you should wait. You should wait because yeah, you got over it again, but boom, another one. 5-minute close under the Bollinger Band. Just know that when you're in bearish conditions, this becomes harder to do. Okay, it's much easier in bullish conditions to trade this. But when you're in bearish conditions, you ought to just wait. You really should. Bearish condition, bearish, all bearish. Here you went above, right? Okay, so you went above and you closed above right here. So now you have to wait for a touch. So we're waiting, it went high, we're waiting for a touch of the bottom Bollinger Band or a flip in the market condition. Neither of those happened because the VWAP is all the way up here. So you're just waiting, and then you dumped hard. And look, a close under the Bollinger Band. So you're still waiting, you're waiting. You tried to get above it, it didn't work, you're waiting, it went under again, and then here's the turning point. This green candle came in. You not only closed above within the Bollinger Band, you also crossed above the VWAP. So now you flip back to bullish conditions. I know we were just bearish for this whole time, but we flipped over the VWAP. The VWAP is important here. You are now in a bullish condition. So what is your entry? You should write this down. You should go back to where I said it because it's going to be important every time. But I'm going to say it again. In a bullish condition, your entry is a touch of the VWAP. So now we wait for a touch of the VWAP. So we went up, and then boom, we touched the VWAP right here. Okay? So again, some critical thinking happens here because then again, you close under it again, but then you immediately open right above it. And when you open above it like that, you see how it skips and it opens above it? You're back to the bullish condition. So you could say that it became bearish, but it isn't really bearish until it stays that way. Because yes, it has to confirm. So yes, you technically became bearish on this candle right here. You immediately flip back. And then you became bearish again, and you immediately flip back. So this is not confirmation. To me, this is just a touch of the VWAP as support, which is an entry. And then you rode this all the way to the top of the Bollinger Band, which is right here. You took your profit right here. What's that as a percent? You rode this all the way up. You got 1.63%. And then you let it dump. And then look, it touched the VWAP again right here. And you got another one. Remember, I said you should wait for 5-minute closes. So if you do wait for the 5-minute close, you go all the way up here. Even though you cross the Bollinger Band, you wait for that 5-minute close and you ride it all the way, 2%. So in the same day, we got stopped out a few times, but overall we're up about 5%. So now you're still in a bullish condition, so you're going to keep doing the same thing. You're going to wait for an entry. So it dumped. Oh yeah, and I forgot to mention, I'm sorry. When you took profit up here, you also had to look for confluence, which it was here. You got confluence. You got above this dashed line at 1, at a value of 1. So the lower one is a value of 0, the higher one is a value of 1. You got above it, and you got also close, the 5-minute above it. That is your take profit up there. Okay, great. So now we're going to look for another entry, and we're still in a bullish condition because we're above the VWAP. So wait, you wait. And then here's where it was. You had a touch, and again, it closed a little bit under, but you should set up a general rule for yourself. You should look for, now this is up to you, depending on your risk tolerance, but maybe 0.2% of a close under is your risk tolerance. Maybe you should go 0.15. So if it closes under, it's technically a bearish condition. But if it doesn't close under by 0.1 or 0.15, I would say 0.1 is fair. I think that's a good cutoff. You're looking for a 0.1% close under the VWAP. And this is narrow. This is very narrow in terms of price action. So to think this is fair, you're still bullish. So yes, like you said, you closed under, but unless it's 0.1, you're still bullish. And now you're riding this up. And now here, in hindsight, you want to take profit. But our rule is the top of the Bollinger Band. So we ride it out. And then it dumps. So here is where you could start thinking about a trailing stop. Okay? So I told you to take profit at the top of the Bollinger Band. And then have your stop loss a 0.1% close under the VWAP. But what about a trailing stop? What if you start getting so many profits that you want to move your stop loss up? That's only natural. So many traders do that. So you don't have to do this. I would recommend it because that's how you secure your profits. But let's say you pump, but you don't hit your target, like you did right here. Then just move your stop up as you're pumping every 5 minutes. That you get a increased candle, you move up your stop. So then when this happens where you dump like this, you got stopped out, but it's okay because you took your profits. You took your 0.75 profit or whatever, 0.1 profit, whatever it ended up being. Or 1%, profit. That's good. That's fine. So I would recommend moving your stop up. Okay, and then you dumped here. And now this is where we've became bearish conditions. But it's not overwhelmingly bearish because you didn't have a close under the Bollinger Band. So your entry would be down here, right? Your entry would be down here. And where do you take profit? One of two things, either the top of the Bollinger Band or the VWAP, whichever one comes first. Why? Because we're in a bearish market condition. So you hit the top of you hit the VWAP here, that's where you took profit. Hey, and after watching this recording again, I just wanted to point out that I forgot in this video to mention that is the distance between your VWAP and your bottom Bollinger Band at least 1%, like we talked about earlier? In this scenario, I didn't test it, but it seems that it might be less than 1%. So you might not have even taken that trade at all. Remember that your total profit has to be at least 1% to even want to get into the trade. And you returned bullish conditions. All right, and you could do this on and on and on. I can go all day with doing this. That is a general idea of what you're going to be doing. So we could be doing this all day, but this video would go on forever. So we're going to go ahead and stop it here. But you should think about this strategy mentally, apply it to whatever stock or coin you're going to be looking at, and see if it will work for you. I want to thank everyone for watching. I hope it works for you. And that's the end of the video. Thanks.